Eric Muathe, Muathe.com, with world market analysis for the weekend of June 25th and June 26th, 2016. Let's take a look at how markets reacted on Friday. You can see pretty much, as we know, across the board and across the globe, huge drops in the market, anywhere from 2 to 3 to 4, and as much as, let's say, 8% here as far as the Japanese market is concerned. So let's say huge drop on Friday. We all know that. Take a look at Europeans market at the close, off the lows of the day, yet still down as much as 8% for the French market, 7% for the German market, and about 3% for the Footsie. Other markets were also down huge. Take a look at the Americas right now, and we see that Brazil is down, let's call it about 3%. Canadian market is down about 1.3 as of right now, with about half a trading session to go. Take a look at the US. Again, 3 hours to go before the close of Friday's session in the US. Dow is down about 3%, Nasdaq 3.7, S&P 3.18. Gold is up 4%, and we see that crude oil is down about 5%. The VIX is up about 39 to 40% for the day. Let's take a look at the charts. If we take a look at the Australian market, and again here we see that it was down almost 3%. So right here, huge drop, bringing the market to about 51.13, and so that would suggest that on our charts here it is trading somewhere here. This chart does not reflect Friday's action, so trading somewhere around here at the close of Friday. Huge drop, so coming all the way here, huge drop on Friday. But what is surprising, and I'll show this throughout the course of this video, is that markets are not yet broken on the daily charts. And I'll show you the two lines we were watching last weekend. So line number one comes from the support line, RSI lows line, which here has yet to break, right? And also there's the other line coming off the perfect entry. This entry here brought the market off the lows, and so we had drawn a line from there, something like that. So as long as those two lines are holding, even though the market was down huge on Friday, this could be an area where the market could bounce. Now, at some point, should we trade below those two lines is when we are going to see that the Australian market and many markets across the globe, that's when we should expect lower prices. For now, I don't see evidence of the daily charts being giving us a sell signal. If we take a look at the Chinese market, we can see that even though the market was down on Friday, we really haven't broken the trend line or the trend wedge, most recent wedge here. So the market is still trading within this wedge. So I think we might have to wait for more trading here to decide whether we eventually break above this wedge or we break below it. So still within the wedge, this market continues to be sideways. If you take a look at the Japanese market, you'll see that the Nikkei, and again the Nikkei down substantially on Friday, down about, let's call it 8%, trading as close to 50, just under 15,000. And so on the monthly chart, the risk we were talking about the last couple of weeks seems to be playing out in that it is now trading below the recent monthly closing low for 2016. So that's a break. And as long as the stock is trading below the previous monthly closing low at 16,026.76, this is a market that could easily see lower prices. Now keep in mind, it closed on Friday trading somewhere around here, so all the way down, so down below that previous monthly closing low. RSI moving to fresh 3-year lows, so that's a major red flag. We see that the MACDs are also trading at 3-year lows, and so both MACDs below, one of the MACDs below zero, the other one at 3-year lows. So 3-year lows, not good on both MACD settings. The default MACD setting could easily move below zero. That would be another red flag. So the risk here continues to be for lower prices. If you take a look at the Indian market by way of the Nifty, you can see that this past week there was an attempt to break out above the previous weekly closing high there. That attempt did fail at the end of the week, which is not a good sign short term. because there was a failed breakout attempt. The level we were watching there for a breakout was any movement above the previous 2016 weekly closing high, or the current 2016 weekly closing high at 8220.80. So we did stay above that, you know, a little bit the past week, but failed to hold above that. That's a failed breakout, not a very good sign. And also coming back to show resistance on the weekly line we've been talking about on the RSI. We see that the RSI has been having problems on the weekly chart, somewhere around there, and at the close of the week again showing resistance here, which is on the weekly chart not a good sign of where the market wants to go short term. This is a 2-year weekly. You can see where that line comes from. It comes from the previous break. We've been discussing this for many weeks, so this is no surprise that it's coming back. This was the break off the highs here, off the highs there in 2015, and that's where we get that line on this 5-year weekly chart. Again, coming back to the same conclusion, that the market seems to be unable to move above this red line. So week to week, this market is still looking like it could pull back. So the weekly continues to be suspect, but as I discussed at the beginning of the video here, on the daily charts we see signs of potential support. For example, coming back to test this RSI lows line could offer the market some type of support. And in fact, if you take a look at my chart here, you can see that it is still above the previous short-term breakout. So right now on the daily, you can see still above this price here at 79.90. It's holding above that, so that short-term breakout is still intact. Yes, it went below that on Friday, but did not close below that line. It is also holding nicely above an upward sloping 50-day moving average. That's a good sign of recovery. And again, RSI lows line right now is holding. There is also a line that it is coming to test, and I'll show you where this line comes from. If you draw a line this way, you can see that the market is, ever since we jumped above this level here, which is this entry, the market has been bouncing on this back test line, on this blue line. Every time the market bounces on the line, you see prices recover. As of Friday, you can see the market did close exactly on the line, suggesting that day to day we should not be surprised if the market finds support here, and day to day the market starts pointing higher. And here on the 2-year daily for the Nifty, you can see that where the line comes from is from the previous RSI resistance line here. Extend that line, and you can see that ever since the market moved above that line, we've been trading higher and finding support on the blue line. So this is consistent with finding support on the blue line here. If the market can bounce on that line again day to day, expect a nice recovery. And also I forgot to mention that on the daily, let's watch how the market is responding to the 50 RSI level. We bounced on the 50 RSI level here for a recovery, bounced on the 50 RSI level here for a recovery, bounced with uniform activity below 50 on the RSI and back above it for a recovery. Right now, if we can bounce back above the 50 level with any type of uniform action, we can see that the market could actually move higher. If we take this weekly chart for the South African market, we can see a perfect example of what is going on worldwide. Yes, on the weekly chart we see resistance every time the market has been trying to move higher the last couple of weeks. So the RSI here is showing resistance, and hence the market came off the recent highs here after hitting that red line. And of course the red line comes from the previous break here. So topside resistance confirmed. Now, if you take a look at this weekly chart, you can also see that it is not broken yet, because the RSI line is showing support. So what I'm trying to see here, and what I can gather from what's going on in the market, is the market is trying to threaten us with lower prices, but we haven't seen the decisive break. So we have yet to break down. And until we can either see a confirmed breakout below the weekly RSI support, or a confirmed breakout higher above the resistance line, I think markets worldwide are probably sideways. Not bearish, not bullish for the most part. Now, as we know, the European markets had a huge drop on Friday, and again, just to remind everybody, let's take a look at how the close in Europe was, and we can see that the French market down substantially, down almost 8% at the close to about 41.06. It's a huge drop. Take a look at the French market. Let's take a look at the French market, and you'll see that it is trading below the previous monthly low. So the monthly low here is being violated to the downside. So below the previous monthly closing low, as we've been discussing for a couple of months here, anything that keeps the market at below 43.58.55 is bearish. Remember, we closed somewhere around here, so which means the market has dropped below that level. Right now we are looking at the monthly RSI trading at 3-year lows, which is very bearish. That's a huge red flag, suggesting that markets could easily see lower prices. And we see that the MACD, or the main MACD right now, with the move on Friday, is moving to 3-year lows and also moving below zero for the first time in more than 3 years. So this is suggestive here of a market that could see lower prices. Let's take a look at the German market, and again, to see where the close was on Friday. We can see that the close on Friday was here at about 95.57. Let's take a look at the charts here, which means that the price did close the end of the week there somewhere around here. So that is still above the previous monthly closing low for 2016, and so the level we've been watching for a potential break on the monthly chart has yet to be broken. So 9495.40 was the previous monthly closing low. Right now we can see that the market is holding above that, which is good. In fact, if you take a look at the daily, you can see that this is how the chart looked on Thursday, at the end of Thursday, and we can see that it made sense that the market did show some type of resistance because it came back to the previous break point. So this break point of the highs of December brought the market lower, and so of course we've been watching this level for levels where this market has been pulling back. And again, we close here on on Thursday, and of course Friday's drop brought the market somewhere around here, so showing resistance on that red line, which is consistent with our analysis. Now, if you go back to last weekend's analysis, the market did respond to our analysis with a nice move this past week before Friday's drop, and that was the reason why we were expecting a move high in the market, is because it had come back to test this entry off the lows. Of course, that entry comes from this RSI movement here. And so we had drawn a line at the end of last week, and we were speculating that the market would bounce because it was showing support on this line. Now, even with the drop on Friday, the market has yet to break this RSI support line, which means that maybe the market is just down, but probably we've seen the worst selling for now, is what I would suspect, until we trade below the green line. So until the RSI breaks below the green line, one has to assume that this market is sideways at the very worst, is my suggestion here. That yes, Friday's selling was substantial, but maybe we've seen the most of that selling, and potentially the next swing trade is going to be to the upside. And one of the reasons why I say that, take a look at this Footsie chart, which is live. So the Footsie, and this is reflective of Friday's action, closing at about 61.38. Take a look at the weekly here, and this is reflective of Friday's action, closing at again 61.38. Take a look at this RSI support line on the weekly. So even though the market was all over the place this past week, we still ended the week with support on this line, which suggests that as long as we are holding this line here, this market is potentially sideways for now. We would have to break below the red line or below the green line. We would need a break below the green line for this to be a market that wants to go lower. So beginning with the analysis from the last weekend, we had drawn a line from here again, because this was on hindsight, nice entry, brought the market off the lows of February. We drew a line from there, and as you can see, the market did have uniform activity bounce on this line, went below it and back above it with uniform action for this re-entry. And before Friday's drop, the market was reacting well, moving higher. Now this is the close, and of course the close does make sense if you go back to the daily. And so we go back to the daily. This break has been a problem since the break. Draw a line from there. Market's been showing resistance every time it hits that line. We've seen a pullback. So we're pretty much stuck in these two lines. You got support on the level here, and then you got resistance every time the market comes here. So I think we are not in a down market for now, in my opinion. We are probably in a sideways market until we can resolve some of these support and resistance levels. So if you consider Friday's action, you can see that huge drop. This is a huge drop from here late Thursday to the morning, early morning here on Friday. But if you take a look at the 30-minute chart for the Footsie, I believe it is showing that it is already showing support, because it came back to test this entry, recent entry. So this movement here began this nice recovery, and it is coming back and has already shown support on this green line here. So as long as this is support, 30-minute to 30-minute, in other words short term, I think the market is suggesting that the worst of the selling is over, and that we should not be surprised if we see the general market start pointing higher because of support right here on the RSI. So yes, huge drop on Friday, but right now the surprising thing is markets are pointing to a potential rebound short term. In other words, the next swing trade might be to the upside. If you take a look at the Canadian market on the daily, and this is 2 years daily chart, so again 2 years of data on the daily, and this one gives us a very interesting perspective into what the market is trying to do. And it's a simple line coming off the highs. You can draw it this way, and you can see that this was resistance, and once the market jumped above this line here in February, so ever since the market jumped above that line, the market's been trading very well. And in fact, every time we hold above the green line, the market has been bouncing higher. We held above the green line here, the market bounced, and right now over the past 2 weeks we've held this line for a short bounce, and as of Friday coming back to test the same line. So if you take a look at this from a 1 year daily, a little bit of a closer view, and what's going on here is a simple line. It should look something like this. So you can see as of Friday we are coming back to potentially test that blue line, and if the market can bounce on the same line and show support, then one should expect that the next swing trade could be positive to the upside here. If this line holds, expect the market to move higher again. Since the move here, which is this movement, we've been bouncing nicely in the market. Every time we touch that line, we bounce. We touch it here, we bounced. Again, we touched it here, there was a slight bounce, and we are coming back to test it. So the Canadian market, just like the Indian market or the Nifty, suggests that day to day we should not be too surprised if world markets start pointing higher. If you take a look at the Brazilian market, and this doesn't reflect Friday's drop, but even with the drop, the market still remains positive for the week, because coming into today's down day or Friday's down day, we can see that the market was already up 4%, and yes, it did lose some of those gains, but still positive for the week here as far as the Brazilian market is concerned, which means that if you draw a simple line, so let's draw a line here, this line is coming into play. because ever since we jumped above that line, the market has reacted very well with a nice move higher. Right, so nice movement since the move there. And what the market is doing, in my opinion, is coming back to test the same line, and as of right now it seems to be holding very well. So as long as the market is showing this double bottom support on the weekly, and also as long as the market is bouncing on RSI 50 level on the weekly, we have to assume that the market continues to be stable, and that probably as long as this line is holding and also bouncing on RSI 50, net, we have to assume that week to week, even the Brazilian market is showing that it could also bounce. Now, I do know that those are hard things to even consider, given that markets are huge. Here with the US market, with about 2.5 hours to go before the close, down about 3% on average for the major indices here, it is hard to see how the market could bounce. But if I take a look at the charts here, it seems to me that the net conclusion is that the market could actually, instead of going lower, around here the market could stabilize and show some support. So as long as those daily charts are not broken, we have to assume that the market is, yes, down for Friday's action, but net, I won't be too surprised if the next swing trade in the market is higher. Now, if we break the support lines discussed here, then of course the market goes back to recording lower prices. We shall see how things go. I'll keep you guys posted. Eric Muadh, Muadh.com. Enjoy your weekend. Good luck, peace, and blessings. ESSEC.